Good evening. Welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. It's nice to see you all again this evening. We have Diksha ji and Bhumika, Darshan, of course, Vanakkam sir. Rajini is here and Aisha, welcome. Manav, I am sure others are in the process of getting in. Welcome to all of you. We started this topic a little. I do agree. This is not possibly the most interesting topic. Maybe not as interesting as incorporation or management of an administration, but still, I think very crucial regarding accounts of companies. We started on one section, which is 128, which only talked about the type of books of account to be maintained by a company, etc., etc. How it is to be inspected by directors, etc., etc. Then we moved on to 129, which is financial statement. Sort of we made a beginning. Then we went to true and fair view, which is now the responsibility of the board to ensure that the true and fair view is there. And financial year, I think we saw that. Okay, welcome Rushita ji, Kavita ji, Komal, welcome Komal Prajapati. Also good. So as I was saying, not a very exciting topic, but I mean, it should be exciting, everything. Because it's connecting us, this is pertaining to us. Now, we go to the other requirements of section 129 with regard to financial statement. Let's understand that the financial statements are the summarized, shall we say, version of the entire books of account. So at a glance, bird's eye view, the balance sheet and the P&L account. The P&L account tells us the profit that this company has made, and the balance sheet tells us where it is locked up or which assets are there and how the money has been sourced and paid, etc., etc. That summarized statements. Therefore, it's very important that they should be correct. So this becomes a very important exercise. In fact, most of us in practice have the shall we say base, or we have our justification because there is a statutory requirement for companies to get their accounts audited. In fact, one of the major comments and threats that we used to give to ourselves when we are talking is, suppose this section is removed, suppose audit and auditors is not compulsory, then what happens to us? Do we still perform a meaningful role in society? It's the bigger question we ask ourselves. Okay, the answer is yes, we do. Because it's not just the audit that brings a client to us, or it's not just the audit that ensures that some of you would be hired by top-notch companies, because even without a statutory requirement, when the accounts reach a certain complexity, a certain volume, it becomes necessary for systematic maintenance of accounts. And at least there is a need for some kind of summarized accounts for the management. In fact, with more detailing, if I may say so. Management-oriented or management information systems are more detailed. So accuracy levels are also needed there. So there is a need for a system. And that system is what we are using. So it so happens that statutorily also they say, hey, in case you're going through it, kindly give us a certificate that things are fine. So that where management is divested from ownership, where the control and management of a company is with a few people called directors, and the ownership of the company is broadly distributed between shareholders, public institutions, government, etc., etc., then there is a need for some kind of an independent review of these transactions and a certification, which is what we do. And this is a function that I think would continue to be there. I don't think this is going to go away. With due regards, even for government companies, they have an independent auditor. See, the CNDG is anyway auditing, but when it's a company, then they need an audit also. Okay, is the point. And I think that independence is what we bring to the table. Not only in practice. Friends, do not think that my comment is restricted to those members who are in practice, who certify balance sheets. No, sir. Even those members in service bring with them a certain degree of independence, a certain degree. I'm not saying it's the same level of independence, but to a larger degree, yes. For example, a chartered accountant would not unnecessarily get into a fraud
He'll say, hey, why you? There are 100 companies in this country. I'm a chartered accountant, member of the Institute of Chartered Accountants of India. If you don't want me, if you want me to do this nonsense, kindly tell me, I will resign. I will easily get a better job in a matter of 15 days, in a matter of immediately, so that I will have to give you a notice. That will be my problem, because somebody else will be calling me day after tomorrow. I may have to tell them that I can't join for 2 months because I need to get a reliever. That's all. So that is the level at which we can maintain our independence. You see why I make this comment? Because many people think members in service are not as independent as members in, or that the need for independence is not there. No, sir. Members in service also need to maintain an independence as against the board. Though they are employees drawing salary, still they should remember that they are independent professionals who are engaged by these companies on a full-time basis for advising them and controlling their affairs. In that role, I think a degree of independence is needed. And the CFO will always be the conscience keeper for the CEO. Even when the CEO wants to do something which looks a little gray, it is the CFO who has to stand up and tell him, boss, this is not going to happen. Please. Thus far and no further. The flex is so much, but beyond this, no way. The law is very clear. You cannot do this. Thank you. Sorry. This is the power that you have as a member in service, which you should exercise, is my point. I make this point again with due regards and without any intention, because this is the first time and possibly only time you will be systematically taken through the sections here. Later on, you might study this in auditing, but that will be from an auditing perspective. So I want you to get this thing thought clear, and so that you are also, see, if you say that the Manavji, if you say that the money is of the members and not the boards, then you as a CFO are responsible to ensure that this money is properly used by the board. It's not as if being an employee, you are bound to agree to whatever the board of directors is saying. You cannot simply, you have to shake your head. No. Maybe somebody in marketing has to do it. Somebody in operations, even operational people will not obey. See, at one certain level in a company now, a man has the need to be independent because his reputation is at stake in the industry. Suppose an operational person is willing to compromise on safety. It will be dangerous for him. On safety, quality and safety issues, there are limits below which we cannot go because we have a reputation to maintain. Similarly, in financial matters, quality of reporting, disclosures, being straightforward in the way things are done, not indulging in unnecessary tax planning, which is bordering on tax evasion, for the sake of tax evasion, all that, when you start doing, reputation goes, even for a man in service. Okay. Chalo. So far, so good. Now the items contained in the financial statements shall be in accordance with the accounting standards. No. Okay. The only one exception is for government company, accounting standard 17, which deals with segment reporting, shall not apply. When they are not all government companies, those government companies engaged in defense production. Obviously, because that will come under the heading of national security. So what is the now? See, if they give segment-wise reporting, they will have to report their numbers and all that. So if somebody is making army tankers, etc. See, there's it's not I don't think it's a government company. There's in Chennai, near Chennai, we have in Avadi, we have a heavy vehicles factory, HVF Avadi. It's the government undertaking. If you give all the details, then it might result in leaking of national security data. So they are exempted from segment reporting, right? More for information. Now, suppose the board of directors of a company has a view that this particular accounting standard should be construed in this way or whatever, or they are not complying with it. According to the auditor, see, the auditor is going to qualify. So I'm reading the accounting standard in days. I feel that this is what should be shown. You are reading it, or your board of directors reading it, and they are giving another view. Then, see, for example, in one case on provisioning of debtors, all sorts of peculiar journal entries were passed by the company. So I told them, this is not correct. This is not the way it should be disclosed. Whatever you say, however, substance over form, etc., still, there is what you're doing is not as per accounting. So once that happened, there was a dispute. Then finally we resolved it. They agreed to what I told. So there is no problem. But suppose there is a discrepancy. Suppose there is a deviation, non-compliance of the financial statement of a company with the accounting standards, then the auditor will qualify, no doubt about it. The auditor has to qualify, etc., etc. But in the accounts, in the financial statements, there should be a clear disclosure that there is a deviation, the reasons for such deviation, and the financial effects, if any, of such deviation. I'm not able to give you any example because I'm not able to conceive a situation where a company would be actually non-compliant. Because if they do that, what big benefit for them? Because let us say that you are non-compliant, you are going to disclose the financial effect now. So any intelligent shareholder, he will immediately make out, and he will, for example, there is a provisioning of liability issue. You are saying that it is contingent liability. I'm clearly saying, Baba, the liability is very much there on top of you. Please make a provision for it. Or on prudence basis, you make a provision, at least part of the amount, because you are now on a second appeal. The first appeal, you have lost, your demand has raised. First appeal, you have lost. Now you are on a very, very flimsy second appeal before the Honorable Madras High Court. Then if you are winning, good. If you are not, but I feel that there's at least amount being huge, make a 50% or 25%, some token provision you make. Without making a provision, if you simply show it under contingent liability, I may not agree. Now there could be a dispute here. There could be non-compliance because I can even show this is not a contingent liability. It has occurred and we are already going to pay. You have lost it there. Okay, like that. So that such disputes, ultimately you have to disclose. So once you do that, automatically the financial effects will be known. What is the big deal? In fact, many times when I'm analyzing a balance sheet, I put the company through a lot of stress test. Stress, sometimes when you test a car, when test a racing car or a normal car also, they put it through something called stress. They make it run over difficult terrain continuously for some time. And continuously they make it run. And then see how the car is withstanding and which parts are weak, so that they can improve it further. So even if somebody is going to put this car to such stressed usage, the car would survive and be there. So when I put companies to stress test, when I'm analyzing them for investment purpose, when I do that, one thing I do is very clear. I go to the contingent liability note. I see what are the contingent liabilities. And then I'll make a diligent number calculation because it will be disclosed now. Once they say it is contingent, they'll say the amount is so much. Then I'll make out. Then I myself give some probability based on my knowledge and I'll make a provision. And I'll see in case this company loses these cases and they are forced to pay these amounts, how will the profit be impacted? Will it make a big dent in the profit, or will it just simply be not bothered? So not so material. If so, then my valuation will take a different time. The amount of risk the risk perception will change. So on and so forth. So like that, the notes on accounts can be used by investors and analysts. Now, so Jaspreet is here, welcome. And Mohammed Sohail, welcome sir, hello. And Sweetie Kumari, good evening madam, good evening, good evening. So all of you are here, moving on. Certain types of companies need not, disclose as per Schedule 3. They can adopt the balance sheet formats given by their respective enactments, or they might have a hybrid Schedule 3 mainly because Schedule 3 is a standard format. But within that standard format, they can go for certain disclosures which are specially needed or which need not be made. See, insurance companies are definitely companies, therefore they come under the Ministry of Corporate Affairs. In addition to that, they are also regulated by somebody called the Insurance Regulatory and Development Authority, IRDA. IRDA has its own set of accounting norms. I think I have it somewhere. I'll just check if I have it. If I have it, I will actually show it to you. I had it somewhere. IRDA. See, this is the IRDA, what I'm now showing on the screen. I'm now pulling up something on the screen. I hope you can see it. Yeah, this is the IRDA, Insurance Regulation and Regulatory Development Authority has given a set of regulations for the preparation of financial statement.
Are you able to understand? So these, I mean, I'm not going to take you through that. I'm sorry. I'm not going to take you through that. I'm merely saying this is what it's all about. See, this is how it will be. IRDA is given separate how it should be done. Loans shall be measured at historical cost, subject to impairment provisions, like that. They've clearly given how it is to be shown, each item. Okay, based on the insurance industry. And this is the format. This is the format of the revenue account. This is how it should be given. They've given specific formats. Profit and loss account. Specific format is there, IRDA ka. Similarly, you have for balance sheet. Almost in the nature of your Schedule 3. But if you are, I'm giving this to you, I'm showing this to you to help you to understand that IRDA has prescribed for insurance companies alone. For insurance companies alone. Similarly, there are separate bodies for various companies. So in case you are auditing an insurance company, you have to be thorough with IRDA regulation. In addition to Companies Act, in addition to Schedule 3 will be there. In addition to that, you have to go through the Insurance Act and the IRDS regulation. I just showed you the IRDA regulation just for your general knowledge purpose. So that you may have to, if you are going to do for a banking company, you should also refer to the rules given by under the Banking Regulation Act as to how accounts of banks need to be shown. Okay. Similarly, for electricity, under the Electricity Act, there are some more disclosures. Similarly, when something need not be disclosed, then that need not be disclosed. Even though under Schedule 3 you are asked to disclose, here they will say no need to disclose. For example, for banks, certain type of provisionings are not disclosed as per the Banking Regulation Act, like that. Finally, any other company governed by any other law, if at all, like for example, telecom companies are governed by the Telecommunications Act and the Telecommunications Regulatory Authority of India, TRAI. So they might come out with some things which you might have to comply with, so on and so forth. So this is more for your information, right? We are now move on to what is known as CFS. I may use the abbreviation CFS, Consolidation of Financial Statements. Friends, if you are writing an answer in the examination and you do not want to write again and again consolidated financial statements, then you can say CFS. But see how I'm doing it. This is the style rule that you have to follow. This is the right rule of style that you have to follow. When you write an answer and you feel that a certain lengthy word can become an acronym or an abbreviation, no problem. You can use. You can create your own acronym or abbreviation also, provided once in your answer, ideally the first time you use that abbreviation. The first time you have to give the full form and then within bracket you write the abbreviation. Thereafter, you can continue to use the abbreviation throughout your answer. But if you do not give your full form and you use an abbreviation, suggestion, don't do it. It's not a good style. Your assumption that the examiner would be aware of it may not be wrong, but still it is inelegant and some examiners may get irritated by such abbreviations, especially if the abbreviation is not conventional abbreviation. For example, M capital, O small, A capital, MOA, Memorandum of Association. It's standard. But still, once you write Memorandum of Association, then within bracket, M capital, O small, A capital, MOA. It is good styling. See, don't mistake me for making this point again and again. These are things that make an edging. Suppose you say, sir, I studied so hard, I'm so knowledgeable, but why I am not getting marks? Maybe these are the small things that are making the difference. I don't know. Maybe. The consolidation of financial statements is a very important thing because when the company has subsidiaries and associated enterprises, the standalone means serve this company only
only this company ka balance sheet. So this company, that balance sheet is called standalone. In addition to standalone, the companies which are having subsidiaries and associated enterprises should also provide combined financial statements, also known as consolidated financial statements. You also have an accounting standard for that, and Ind AS is there for that, which you have to comply with. Okay. The consolidation of financial statements of a company shall be made in accordance with the provisions of Schedule 3. Schedule 3 gives you rules for consolidation and the applicable accounting standard. Okay, I am zero in accounting standards. As you know, you tell me, which is the accounting standard dealing with consolidation of financial statements? General quiz, in-class quiz. Which is the accounting standard dealing with consolidation of financial statements? Accounting standard, GAAP, Indian GAAP. Or if you know the Ind AS also, you can do both. The Indian GAAP as well as the Ind AS. I don't know. You tell. Okay, let us see. I'm sure you know. AS 27, you're asking or telling? Okay. The CG may provide for the consolidation of accounts of companies in such manner as may be prescribed under Rule 6 of the Companies Accounts Rules 2014. A company having one or more subsidiaries shall lay a CFS along with standalone financial statements at every AGM. So the rule is, when the company has one or more subsidiaries and associated companies also, then it should lay. Lay means present. Lay means present. I lay means there's a table. The balance sheet is a document, right? I place it on the table, present it. So lay means present. So the company shall lay a CFS, that is consolidated financial statement, along with standalone financial statements at every AGM. Yeah, many of you have put AS 21. So majority wins, na? I don't know. While on consolidated financial statements, once I complete it, I'll tell you one interesting anecdote from my life, which could make you feel, hey, this guy is teaching me like that, you will feel, but I will tell you anyway. As a disclosure, I will disclose it to you, but not now, after this. The statement containing the salient feature of the financial statement of a company's subsidiary or subsidiaries, associate company or companies, and joint venture or ventures, everything. See, in the case of joint venture, what you should do, your stake may be 50 or even less, 40, whatever, you should convert it and show that other party has an outside liability in the balance sheet for 60%. And your 40 will have to be valued and bought in, and that consolidated. It's a reverse of normal consolidation, Baba. See, in normal consolidation, the holding will be holding 60% or 70%. The minorities will be holding 30 or 40. So you will value the minority interest now, and you will proportionately bring it into the balance sheet as a liability, right? Here, the same thing will happen, but except that the company may not be a majority. In a joint venture, in an associate company, you are only 20, 30. He is 70. The other shareholders are 70, whoever. Okay. So you will have to do it. Okay, you have not studied about it. You are in good company. I will talk to you. I will tell you. You don't want to study, or you have not studied, sweetie ji. That you have to be clear. But this is very important. AS 21, not only AS 21, consolidation. Okay. Provisions applicable to, see, this is an important activity that you as a future, suppose you decide not to be in accounting itself, you get into finance, corporate finance, or investment banking, or derivatives, okay, whatever, then you don't have to bother about all. Even then, my humble suggestion, you should know a little bit about don't forget your accounting background. No problem. If you don't know, it's okay. You are in a student stage, you can learn it. Don't worry about it. If you don't know, now you know. It is AS 21. Okay. Now, provisions applicable to preparation, adoption, and audit of the financial statement. So, all the rules that are applicable to the standalone will apply mutatis mutandis. Mutatis mutandir or mutandis means with such changes as may be applicable, with suitable changes.
See, when I'm talking about standalone, I will be referring to certain things. But when I come to CFS, the reference should be correctly made. So with such changes as may be applicable. Mutatis mutandis means with such changes as may be applicable. Conditions for exemption from preparation of CFS. In some cases, CFS need not be prepared. Members, including those not otherwise entitled to vote, do not object to the company not presenting CFS. So you don't want to present CFS. Then members, including those not otherwise entitled to vote, differential voting right shares, preference shareholders, they do not object to the company not presenting CFS. It is a company whose securities are not listed or are not in the process of listing on any stock exchange. That is, members do not object and it should not be listed or in the process of listing. It is its ultimate or any intermediate holding company files consolidated financial statements. See, this is only applicable to cases where it is a mid-subsidiary. That is, it has a holding company above it and a subsidiary below it. Subsidiary below it. Now that mid-subsidiary would have to present CFS now with itself and its a subsidiary. See, A Limited, it has a subsidiary B Limited, B has a subsidiary C. Now A has to present its accounts with C and B rolled into it, no problem. B has to present its accounts with C. Now this is what exempted. If members, obviously the main member is the holding company, they go to hell, I am anyway consolidating for you, all of you, why are you bothered? So the members, including if they are having preference shareholder, even they should not object. Then this should not be a listed company. That subsidiary should not be a listed company. And that ultimate holding company or any intermediate holding company is filing consolidated financial statements. So the exemption is applicable to a mid-level subsidiary who is anyway whose holding company is going to file a consolidated financial statement. See, while on consolidated financial statements, when I was preparing for my CA final, there was no AS21. But we had consolidation, book entries, holding and subsidiary companies and consolidation. And so at that time, by now, you will be aware that I'm not very strong in accounts. Accounts is not my forte. Though of course, I got 65 marks and all. Above 60, I got in accounts and I'm knowledgeable in accounts, but accounts is not my favorite. There are people for whom favorite subject. Now, for me, that is not favorite subject. It's a subject and definitely a knowledge base. So I was studying this consolidated financial statement. Then I went for even one class conducted by one very, very senior chartered accountant. Those days in Chennai, he was a very famous chartered accountant who was a teacher of par excellence. No more, he's no more. The great late C.A. Rangarao was a great man. I used to attend his class. But then, see, he is a great man. He taught very well, but I am a fool. I didn't understand. So when I went and sat in that class, first problem, second problem, I was able to understand. Asset are total, liabilities are total. Not bad, not bad. Then minority interest came. Okay, chalo, not bad. Fractional. Okay, pre-consolidate, pre-acquisition profit, post-acquisition profit. Okay, some rules I could make out and I could understand, blah, blah, blah. Even then, it was a little bit difficult for me, going on. Then suddenly, then stock adjustment, stock adjustment, investments and profits, etc., where this fellow owes him, that fellow owes him, book the cross entries, put in holding and so. That is all okay. Minority interest also, no problem, I can calculate, etc., etc. Hey, they said chain holding. A, then B, then C, C into B, B into A. That was a little bit of a trouble for me. I said, hey, what is this? What is this? Then again, they said cross holding. Of course, by now you know from your learning that cross holding is prohibited. Today, holding can hold in subsidiary, but subsidiary cannot hold in holding company. So cross is not. Cross holding means holding will hold in subsidiary hold in holding. One or two cases it's possible, as you know, where they are already holding it before the law. Then they can continue to do it. Otherwise, today you cannot go and do it. Subsidiary cannot invest in its own holding company. But still they used to have cross holding. When I started teaching cross holding, I got mad. I said, no, I'm not going to do this. I can't. And I came home and I omitted the topics. This is where you're going to get very angry with me. Okay, I omitted the topic like Sweetie Kumari. I have not studied about it at all. Not all. So I went to the exam, but then since I skipped this topic, I ensured that the remaining topics I was thorough. Other topics I was very thorough. Thorough means thorough. Okay, beyond limit thorough. That otherwise I can't afford to do this. Be careful. The story cannot be taken wrong sense, please. So I went there on the day of the examination. I'm leaving from exam because I've got all India rank in intermediate. My uncle got me a motorbike. So I used to take that motorbike in Suzuki and I was going to leave when my father was sitting in the portico and reading newspaper, drinking coffee. He said, so you're going for the exam, huh? Yes, sir. What exam today? Advanced accounting, sir. Okay. Have you studied well? Yes, sir, I have studied well. Yeah, yes. Have you studied holding and subsidiary company? I said, no. Then he said, good, because he has also not studied. He went for exam. Okay. This is the typical Srikanth story. Don't take it in the wrong sense. But it happened. What I told happened. Of course, I cleared the exam with the rank. When All India 30th rank holder in final. But exam, I got All India 30th rank. But why I am telling this, I got 65 in accountancy. But this holding and subsidiary till the very end, I know. Later on, when I started practice, I learned, then AS21 came. When I wrote the exam, when I wrote my final exam in 1987, there was no AS21. At the time, there was no AS21. Seriously, no AS21. Then only AS21 came. Okay. And but then consolidation was there. So then I studied AS21. And it was not allowed even then. These fellows, out of sadism, they will give problems with cross-holding. The fellows who set that examination and the fellows who write the books on Vishnu Shukla and Grawal and all, pure sadists. Sadists to the core. Okay. The intent on cruelty to students. Nothing else. Their approach is how to make life miserable for a CS student. That seems to be their goal in life. Anyway. So purely for humor only, I have told the story. Please do not immediately say, Srikanth told not like that. You study. Okay, you study everything. My approach, I have told you. Okay. And of course, I gave you the point also. If you want to skip something and go, then you have to be thorough in everything else. Nobody can beat you. Like that, you should be. Sir, intermediate subsidiary, not holding. Did I say intermediate holding company? Intermediary subsidiary. That is, A is the holding company of B. B is the holding company of C. So this guy is the middle guy, na? B. That's what I meant by intermediate. There is nothing called intermediate holding. I never use the word intermediate holding. Okay. Intermediate, that is in between the two. That type of a fellow only will. Whether amazing or not. But this really happened. Not joking. Not joking. Really happened. Okay. So, in some cases, the central government has the power to exempt the operation of Section 129. Central government may suo motu. See, these are all Latin terms. As and when you come across it, I am telling the English meaning. Make a note somewhere. Mutatis mutandis, with such changes as may be applicable. Suo motu, on its own motion, by itself, without any application, on its own motion. Motion means decision. So the central government, on its own decision, motu means motion, on its own motion. Suo motu, by itself, or on its own motion, or on an application by any company or class of companies, exempt any company or class of company from operation of Section 129 or the relevant. So they'll go and say, we don't have to give this, this is not applicable to us, kindly exempt it. He'll exempt it. But it has to be done properly. Your association should go give reasons. And then the Institute of Chartered Accountants of India will be consulted. They will give their view also. Then only it will be done. Such exemption should be in public interest. They should be not because you don't want to show, because you want to show, don't want to show, no. But showing it or not showing it should be in the public interest. And the exception may be unconditional or subject to such conditions, whatever it is. See, this only says I'll just see in point C of slide where that one I'll explain. Boss, that's what I was explaining. If you listen to me, you will be able to get the book. Iron yes. Boss, when I'm explaining, you listen, please. Intermediate holding company. Okay. See, that is what. Boss, intermediate holding company. Only I was giving an example. A Limited is the holding company of B Limited. B Limited is the holding company of C Limited. Now, B Limited is an intermediate holding company. Got it, Mr. Mohammed? Now. So maybe I didn't say that. Sorry. Okay. Intermediate holding company. Now, why I am saying this now? B Limited B Limited need not consolidate with C. Because B and C together will be consolidated in A, ultimate holding company. I'm seriously not able to see any intermediate holding company consolidating and another company not having to do. Because, as you know, as per the rule, A, B, C, 2 levels. Below that, you cannot go unless you are a banking company. So maybe if you are a banking company, then there will be 3 or 4 levels now. So that A, B, C, D will be there now. Then B will become an intermediate holding company. C will become an intermediate holding company. D will be the ultimate subsidiary. A will be the ultimate holding company. A, below that B, below that C, below that D. A is the ultimate holding company. C is the ultimate subsidiary. D is the ultimate subsidiary. B and C will become intermediate holding companies. Got it? Elaborate. When the subsidiary holding is elaborate, then you will have all these things. In which case, the intermediate holding companies or the ultimate holding company, if it is consolidating, then the subsidiary need not consolidate. Provided members do not object, provided it is not a listed company or in the process of listing. Only then this exemption will. Clear, sir, Mr. Mohammed? I hope I have given you the best example or best explanation I can give you. Okay. If you have understood, kindly confirm. If you have not understood, tell me, I will again explain. No problem. Penalty, again, see, wherever they will prescribe penalty, the entire Companies Act is a penal code. If you don't do this, punishment. If you don't do that, punishment. Everything punishment. So penalty is there. Again, see who are all the people. MD, whole-time director, CFO, any other person charged. In the absence of above all directors, suppose the company does not have managing director, no whole-time director, no CFO, nobody has been charged by the board, then all the directors of the board, part-time directors, executive, non-executive directors, everybody will be liable. Here imprisonment is there up to 1 year because it's a very serious offense, not presenting financial statement and things like that, or fine. So here what can happen when there is a or here, you have a chance of escaping. You can go to the regional director or tribunal and you can do something called compounding, by which they will say you are not guilty and they'll take a fee, compounding fee, and they will say. It is possible only where the offense involves imprisonment or fine or only fine. But when it says fine and imprisonment, the word and is there, then no compounding. So that is why you have to be a little careful about whether there's a disjunction here or a conjunction. If it's an and, then you're out. You can't compound. Okay. Now just see this also. Same penalty here. Except that here, they don't talk about in case the above are not there, then all the directors. Here, that is there. Just want to contrast this. Okay. 129A talks about periodical financial results. Means like, if you know, listed companies are compulsorily required by SEBI regulations to present quarterly financial statements. Listed companies are. as a guidance, Q1, Q2, Q3, Q4, you have to give unaudited results. Or sometimes they might have to be audited, but it will be for limited review. You'll have to give a limited review audit and say, we have seen this. Given that it's not finalization, this is the limit up to which you have seen. Give it. Similarly, the central government, the MCA, may require such class or classes of unlisted companies. Please note, listed companies already covered by SEBI regulation. They are already preparing quarterly every year. Every quarter they have to give. There is already there. For them, no need because they are governed by SEBI. General rule, listed companies will come under SEBI control. Unlisted companies will come under MCA. General rule. Though, being companies, they are also supposed to comply with Companies Act and MCA has a control over them. But where there is a SEBI regulation, that SEBI regulation they have to comply. Especially, for example, when we saw buyback, we said for an unlisted company, you comply with the MCA guidelines. For a listed company, you have to comply with the SEBI regulations. The Securities and Exchange Board of India regulations. So already SEBI has prescribed quarterly accounts, quarterly review, limited review, submission of quarterly financial statements, QFS. But whereas for unlisted companies, MCA may provide, but as of now, they have not. They have not. They have given themselves the power, but they have not. They do that, it will be good for chartered accountants because we will get one more additional work to be done. So, but then most clients will not pay extra for that. They will come and say, boss, already I'm paying you a fat fee. Why should I pay you some more? Or maybe we might be able to charge some small amount, or multinational firms will be charging a huge amount, whatever. It will be good for us. But as of now, it has not been prescribed. But they have given themselves the power that they may prescribe preparation and the financial results of the company on periodical basis. Periodical, they have said, they have not exactly said frequency. But my humble view, it will be quarterly because listed companies give quarterly, also quarterly. And of course, it has to be approved by the board of directors and complete audit or limited review. Audit is very difficult. What we normally do is called limited review. For that, there is a separate accounting standard, how to conduct limited review of financial statements and disclose. See, the point limited review is the year is not yet over now. Certain assumptions cannot be made. Therefore, certain provisions cannot be made at this stage. I can't tell you. Let the year get over on 31st March. I will do an audit properly. But sitting on 30th June, broadly I can give you. Okay. Ensure that matching concept is maintained, profit is correctly disclosed, stock valuation, depreciation calculation, pro rata, all that you can see. See, there could be a contract which is, as of now, there is no problem. But in the next quarter, it might become a problem. But now I cannot say it will become a problem and make a provision. Yeah. I have to wait for the next quarter. Only then I'll know how to disclose that. All this will be, we have to take care. Maybe if you feel that there is a possibility, but even that I cannot, because as of today, it has no impact. As of today, both the parties are proceeding as if it's going to happen. But I know for sure that it's not going to happen. Construction contracts, there may be a penal clause, but that date may come later, but the contract is going on under completion. Should I mention it? Not. You're able to see the dilemma. As an auditor, I have nothing to do with it because as of today, the liability is not there. It's not even contingent. Only if there is a default, it will become liable. And I have not defaulted as of this quarter. Next quarter, if I default, but it looks a lot like you will default, in which case there will be a liability, but that will arise only in the next quarter. This will keep on going round and round and round. Okay. Anyway, that is the enjoyable work you are all training yourself to do now. Over a long lifetime, you are going to do only this type of calculations, discussions, finance, accounts, auditing. Welcome to the world of finance. File a copy with the registrar within a period of 30 days of completion of the relevant period with such fees as may be prescribed. Without fees, these fellows are like Purohits. Anything these Purohits come and do now, anything that the Purohit does, sits and gets up, he'll say Dakshina. just sat down and got up na dakshina. For that, everything dakshina. Like that, registrar of Ministry of Corporate Affairs, you come and talk to me, fees. You upload some blank paper also, fees. They will prescribe and you have to pay it. Okay. Right. Moving on. Authentication of financial statements. Authentication. Okay. Please understand what you and I will be doing. What I do and what you will be doing would be auditing. And we will certify. What we give is a certificate, audit certificate. We will certify. Whereas this is authentication. Who will authenticate? The board of directors. The board of directors have to jolly well sign first. The financial statements, including CFS, if any, shall be approved by the board. At the board meeting, they have to meet, or even video conferencing is allowed. Then you have to approve it. Then sign. The financial statement should be signed by the chairperson, if there is a chairperson who is authorized by the board. In case the chairperson is not authorized, then 2 directors, out of which one shall be MD, if any. So 2 directors should sign. If MD is there, MD has to sign. The chief executive officer should sign if he is there. CFO should sign if appointed as a CFO. The company secretary also has to sign. I've caught you now. So the company secretary also liable. Okay, but they are not certifying the balance sheet. They are not certifying the financial statement. They are merely authenticating it. They are saying, hey, this is it. This is the real balance sheet. The signed balance sheet. You know why that is very important for you and I? Because I'll read the last line and then I'll come to you. In the case of 1-person company, it is sufficient if only 1 director signs. Because there could be only 1 director. 1-person company, 1 shareholder, 1 nominee, 1 director. That 1 director should sign. That is all. Now, as an auditor, why am I interested in authentication? Because, see, these fellows come to me, show me one financial statement. I sign it and I certify it and I give it to them. They go back and then quietly change everything, put my signed CAS Srikanth, partner, Karpagam Krishnan and Natarajan, whatever, firm registration number, my membership number, everything they put, but the accounts are wrong. Completely different account. Sales figure is different. What I certificate is not they are putting. And they are publishing it. Are you able to understand? They are publishing it. Tomorrow, something happens, the NCA or the SEBI or CFI, SFI or the Serious Fraud Investigation Office calls me and says, Srikanth, what have you done? You have certified all sorts of wrong figures, clearly shown to be wrong. Hello, my dear friend. Please don't be in a hurry. Which one did I certify? Ask them to produce the correct one. No, what do you mean? Do you have a proof? Yes, sir, I have. Here is the balance sheet signed by the board of directors and given to me. That is the balance sheet I signed. Whatever they have published, I have not signed, sir. Ask them to show you a signed balance sheet. I have a signed balance sheet, which is signed by them also. That is why authentication of financial statements by the board is very important. Unless the board signs, I won't even touch that paper. Of course, that paper is what I have audited. That balance sheet, that P&L is what I have audited. I have assured myself that these numbers are true and fair and that they reflect the financial affairs of this company. I am happy. Then I sign. That is why in auditing paper, you check out, when you certify a balance sheet, you will also say, this is the balance sheet referred to in my report as of even date. That wording, why do we give that? This is the balance sheet referred to in my report. What do you mean by this is the balance sheet? Later on, if the MCA comes to me and catches me, I'll say, look here, see this? Signed by the board of directors, CFO, company secretary. My sign is there now. This is the balance sheet referred to in my report as of even date. Whatever those fellows have published it, I have nothing to do with it. Please arrest them immediately for fraud because I have nothing to do with it. I signed this balance sheet. They should have published it. They have not done it. I can't keep watching out what they have done and all. Okay. Sir, what could be the possible reasons for which disclosure, Manav? Kindly, can you be a little more specific on which disclosure? Because, see, the contextualization is a problem. So I am unable to understand which disclosure. So kindly elaborate on which disclosure you are talking about. I will explain. So this authentication of financial statements by board of directors is very important. Okay. Now, once this is attached, then technically I conduct my audit only on that balance sheet. But in the meantime, things will be going on. The audit will be going on based on balance sheets provided to us. But finally, on a crucial moment, balance sheet will be printed, verified by the audit people, verified by the finance department, verified by, then MD will sign, directors. Then auditor signs. Balance sheet becomes perfect. And I have to keep one copy of the signed balance sheet will be kept in our office. Why? Tomorrow I have to produce that as proof. So the audit, then only I will issue the auditors. On that day, when I sign the balance sheet, I will release the auditor's report. That is why in the auditor's report, I am referring to the balance sheet. Now, this is the balance sheet referred to in my report as of even date. That's what that wording, this is the balance sheet means. So periodical financial statements are meant to give stakeholders some kind of an early warning system. Early warning. So early warning, see, suppose in the first or second quarter itself, we become aware that there is a loss. So we are aware now, early warning, instead of waiting for the end of the year, then auditing, then publication of financial results that may come a little later, July, August, it's too late. So quarterly and periodical financial statements are meant to give early warnings about the financial position of the company, right? It is not mandated as of now, but it may become mandated. Authentication means signing. Yes, signing. Sign. Physical with your hand, signature. Okay. Is audit documentation. This is the ultimate audit documentation. You see, on the balance sheet is the top sheet. Then below that we have all the documentation. How did I conclude about debtors? How did I conclude about liabilities? Everything, audit notes. Now, in those days when I was in Pricewaterhouse, we used to have audit working papers, documents, paper, physical paper, kagas mein, but no, now it's not like that. It's a software that you have to keep updating and confirming. So the audit checklist will be there. Just have to flag it and say, yes, done. Any supporting, you scan it and you push it in. There are very advanced auditing control software that keep track, and they give a framework within which the audit will happen. And finally, it will be saved so that whenever you want, you can go for, you see, remember, the auditor is also audited in the sense that my firm is a peer reviewed firm, which means a peer reviewer has gone through my auditing documentation and my audit methodology, and to ensure that it complies with the SAP, the standard auditing practices. So we have very rigid controls on this. The Institute of Chartered Accountants of India ensures that the auditing process is very, very rigorous, and that every company, every audited entity is subject to the same degree of scrutiny across the institute. So this is the idea. So the auditor's report, do you remember what I told about attached, annexed and all in the last class? Please remember, the auditor's report shall be attached, means only clip. We are only clipping. You remember yesterday, that day class, clip. I'm putting clip. Whereas the signed copy of every financial statement, including CFS, if any, shall be issued along with a copy of any notes annexed. So, balance sheet, P&L is annexed. P&L itself is an annexure to the balance sheet. But then, of course, today, balance sheet and P&L together is Schedule 3 format. Then, statement of changes in equity. Then, notes. All that is annexed. Then, audit report attached. Director's report attached. Then, the whole thing becomes your financial statement, annual report. Then PDF format, you can download it and see. Any company, you just download it and see. Okay, fantastic. So according to Rule 8 of the company's rules, accounts rules, the board's report shall be prepared based on the standalone financial statement of the company. So now we come to another important document which forms part of the financial statement, which is your board's report. This is the report given by the board of directors, a report of the financial affairs of the company. Sir, financial statement is approved by board. that process of approval involves, no, it is first approved by the board. Then only it is signed. See, it all happens in a single board meeting. Yeah. See, there is a board meeting. All the donkeys come and meet. They keep talking. Chances are they won't even do that. They will call the art. See, I will go there. They will all be sitting. We'll have a cup of coffee. Board meeting will happen. I will be sitting. Then they will say this, that, blah, blah, blah. Then finally they'll say approved. Then, okay, sign, man, sign. So they will all sign. Then I will also sign. Matter over. That's all. Or else, if I'm not in town, I'm somewhere else, then on Friday, they will all meet, drink a cup of coffee, eat cashew nut, talk, and then finally approved. Then approved. Then sign. Put your signature. Sign karo. Then they will all sign. That means authenticated. Are you able to understand? This is what happens in authentication of financial statements. Approval means the board minutes will be recorded. The board of directors considered the financial statement as presented by the CFO or as presented by the director of finance. There was a discussion on the same, and after deliberation, it was the financial statement as presented were approved. The financial statements are signed by Mr. Donkey and Mr. Monkey. Mr. Donkey, managing director, and Mr. Monkey, and company secretary, CEO. Everything in this also. Okay, so this is how it will happen. They invite, I will go. It can be present. Why not? Why should I not be present? After all, I'm going to sign after them. I can also be there enjoying the fun. What is there? I can, if they invite me, I will go. They give me a good lunch, I will definitely enjoy it and come back. Okay. Depends. Some companies do that. Some companies will simply sign and then send it. Depends. The CEO is very close to me. He says, Srikanth, you also come. Some doubts are there. Finally. So, see, but that cannot be approval meeting. Boss, that will be one earlier meeting. When my team will be there, finance team will be there, CFO will be there. It will be fighting. I will say, no, I cannot sign. My people will say, sir, this is a problem. Then finally, we will all, CFO will handle that. Then that day, CEO also will come. Then everybody will come and sit and talk. And then we'll sort of in principle. Then I'll go off. Then everything will be prepared properly, ready for signing. Then this, at the time, I may not go because already I've gone there and discussed everything. Now, what is there to discuss? So I'm just giving you some dramatic way of explaining, ma. Don't take it literally. Every time I can go means I have no time. Half the time, if all the companies that I audit and my partners audit, every meeting I have to go, it can't be happen. If they invite, I'll go. Sometimes they'll call, Srikanth, it's a long time, come on. It's a good, let's have a lunch together. And then it's hello, I'll come. Go, let's talk. Why not? Sometimes they might pick my brain. Some other tax advice also they'll take. OC. Okay, take it, enjoy. If that will give you some satisfaction, take it. But if it comes to reality, then I'll say, boss, let's talk about it. Later on in audit and auditors, you will have to tell me whether I can undertake a tax advisory assignment from a company where I'm the statutory auditor. Can I also do a tax advisory assignment for them? Can I do a GST as advisory assignment for them? Where I'm also the statutory auditor. I don't know. You will learn about it. Okay. Boss, most of you are reading this from the book, ma. For 35 years now, I have lived it as a life. Are you able to understand? So for you, this is bookish. For me, it is life-ish. Where, see, the signing, authentication and all, it's happened to me year after year after year, I'm doing it, right? It's fun. We meet the same people. We have seen companies that have started with, my father started auditing these companies where their turnover was hardly 15 lakhs, 20 lakhs in 1970. Today, the same company we are auditing is over 800 crores. So in 30 lakhs, I've seen this entity grow to 800 plus 900 crore company. Even today, one client came for discussion. That's why I could join a little late. He's a catering business, industrial catering business. When he came to me, he was doing hardly 6 crores, 9 crores he was doing. Now he's saying, sir, we are touching 80 crores and this year we'll cross 100 crores. So growth happens. And these are people doing things. These are businessmen running businesses. And I'm a professional advising them, helping them to be compliant. Growth with compliance. So that is the role I play with these people. So all these section, that is there. That is there. But beyond that is the business, is the people, is the protection that I give to them as a member of the institute to ensure that with all this financial growth, they are compliant. They obey the law and that they will not lose money because of non-compliance. Okay, and that growth will not be affected by non-compliance. See, this is how I have defined my role as a member of the institute. Thereafter, this section number, so and so, rule number, so and so, that comes later. That's about, let's talk about it things. So that way you will not find me to be such a nitty. You will not find me to be a typical accountant. Penny wise and pound foolish, nitpicking, wasting time on small issues when the bigger issues are more important. Small issues can be handled, but bigger issues you have to understand what they are. Then the small issues will fall in place. If you ignore the whole picture and then keep on meddling with the small details, you are an accountant. But when you look at the bigger picture, you are an advisor. Friends, the choice is yours. Are you going to be mere accountants or are you going to be advisors? Now itself you have to decide and train yourself accordingly. See, those of you who decide I am an accountant will only read sections, mug up, vomit, Income Tax Act. So you will get very high marks in the exam. Assure you will get high marks in the exam. But in the real life, when you go there, the problems that you will face, you will feel surprised. Hey, this I didn't study in the book. Most of the problems that you will face will be not in the book. But the knowledge that you acquired will have to be applied. But not in the bookish way, but in a different way. Similarly, you're reading subjects separately. For me, there is no separate subject. So when the client comes to me, I can't say, today this is an auditing exam. Today, please don't ask me any income tax question. Like that, I cannot tell. You will ask me everything, and I have to see everything. When I'm addressing one issue, I'll have to address it from all angles. Baba. Auditing, accounting standard, TP, income tax, international taxation, domestic taxation, GST, indirect taxation. Everything I have to see. Are you able to understand? And I have to ensure that all these laws are complied with. Why I'm making this comment, even at the cost of irritating you or making you feel that I'm wasting your time, is to help you understand the broader nature of the studies you're doing. So you please don't think I'm attending company like Class Recon. I'm attending advanced accountancy, somebody else, I don't know who the faculty is. Whoever it is. No, sir. Everybody together is giving you the knowledge which you have to apply. Each one of us in our own way. Manav Agarwal, let us talk about it when I come to audit and auditing taxation. Okay? When I come to auditing, we'll audit and auditors, we'll talk about it. But you also do some research into the topic. Okay? And according to see now, Darshan even quotes section 144. Let us see. When we come to audit and auditor section 144, we will again discuss this. I jumped the gun because I know you are all highly intelligent students and you will have your own opinions. So I will reserve it. Good. I'm not saying you are wrong. I'm saying we will discuss it when we come there. Your answer is noted. Just like you have noted, I have noted. Chalo. Now, the board of directors report should contain certain standard, things. These are the matters that need to be figuring in your board of directors report. Okay. Right. I will just quickly run you through it. You may also try to remember this, but it's pure dry theory. I don't want to waste too much. The web address, if anywhere the annual return has been placed, number of meetings of board, how many times did you meet, you have to disclose. Best way to remember this is to take a board of directors report and go through it along with this list. Then you will see how they have disclosed these things in the directors. Directors responsibility report, that will be dealt with separately, very important. The directors have to confirm that these things are our responsibility and we have seen. See, directors cannot quietly hide behind the auditor anymore. Directors cannot say, I'm not aware of the subject. I entrusted it to our chartered accountant. No, sir. Accounting you can entrust to an employee to an extent. But beyond that, it's your job. Directors have to take call. Compliance is the director's responsibility. It is not the responsibility of CFO. It is not the responsibility of auditor. CFO, to an extent, as an employee, he can advise the directors. But if that's it, so long as he has advised them, his job is over. See, that's why always I advise my people like you, whenever there's a non-compliance issue in your company, please escalate it. Not orally, but through a mail. Ideally, report it to the audit committee. When the next audit committee meeting, you in the agenda, you put it. So that let them talk about it and take a call. Yeah, it is not your headache. You are just a pay. Let agree.
Breath.
Anyway, so let us assume that I have discovered a fraud. I will go and report it. Let us say I have reported it. Hey, anyway, it should be disclosed here. See that they think, by doing this, they can put auditors into trouble. Not really, because auditors very well will report the fraud and go. Okay. 2 or 3 audits over the last 35 years, 2 times I have to refuse to sign the balance sheet because the company was not able to understand my point of view. I was saying this is wrong. What you're doing is wrong. Please don't do this. Or else this is the disclosure I have had to give 100%. No. How can you disclose? It will spoil our name. You are aware that it will spoil your name now. Why did you do it in the first place? You are aware that it's spoiling now. It's something that you should not do. Honorable man will not do. You know that. Then why did you do it? Now expecting the auditor to keep quiet is not correct. You are putting me in trouble. See, I've got 100 other clients, ma. Just because of one rogue like you, all my other clients will suffer. I'm not price waterhouse, Baba. I have a reputation. I can't do this. I can't sign these balance sheets. No, like that. So, declaration by independent directors as to their independence. They should clearly say, later on, when you come to final exam, you will understand this better. In the final syllabus, we will talk about independence of independent directors. That those conditions are to be satisfied by them continuously. So they have to give a declaration that they are satisfying the conditions of independence. Similarly, comments by board on remarks made by auditor and CS, if any. See, suppose the auditor has given a qualified report. The directors have to give their report on this, their remarks on that. Similarly, the company secretary also may conduct a secretarial audit. In some cases, secretarial audit is there. When a secretarial audit is being conducted, he may give any qualifications that the board has to comment and say, this is what it is. We are in the process of rectifying, or this action has been taken. Something you have to give your particulars of contracts or arrangements with related parties. See, all this is in your final syllabus. In the final syllabus only, you will come across related parties. Okay. We already saw the definition of related party, but the section which deals with it, 188, 184 are in final syllabus. Okay. Amounts carrying reserves are paid by way of dividend. So you have to say so much is being carried as reserves, so much is dividend. Conservation of energy, technology absorption, foreign exchange, you have to give disclosure. So many things. CSR policy. Similarly, recently pandemic and all, the MCA wanted to have disclosures. Simply because pandemic is there, I also want to be seen as someone doing something. Immediately the minister will announce. So these disclosures are to be made about pandemic. CSR policy and initiatives. Later on, we'll be seeing CSR. In the last class, we'll be seeing CSR. That CSR policy should be disclosed here. And what are you doing on CSR? Okay, we'll be seeing it elaborately in the last class. On accounts, we'll be seeing on Thursday, inshallah. No, today is Thursday. No? On Saturday, inshallah, we'll be seeing that. Company's policy on directors' appointment and remuneration, particulars of loans, guarantees, or investments, state of company's affairs. What have you done the last year? Yeah, what did you do? That's what we want to know, Baba. As a shareholder, I want to know this. What did you do last year? Financials are there. What are your broad plans? Where are you now? Where did you want to go? Where are you now? What can we hope for in the future? Like that. Material change affecting on financial position, which is not there in the balance sheet because it is. I told you an example. Now, see, something is going to happen in future. This could endanger the company. You have to talk about it in the board of directors report. If you do not disclose it and then it is found, it is a violation. Development and implementation of risk management. See, risk management is an ocean topic by itself. Any business entity, any commercial enterprise is exposed to risk, multiple risks. It is a duty of the board of directors to mitigate the risk, control the risk, ensure that the risk is addressed. Where it is not, where you can do nothing about the risk, at least you should know that the risk is there. Okay, and how you are, and in case the risk, it becomes, how are you going to recover? How are you going to have BCP, business continuity planning? See, if there's a sudden atomic warfare, Still, will you be able to survive and run the company even after an atomic war? This was the question that I was trying to answer. This is what they were trying to do when they discovered the internet, when they invented the internet. ARPANET, as it was called. The idea of ARPANET was, at that time, the Americans were seriously thinking that the atomic war will destroy the world. They knew, because they were controlling atomic weapons and they already destroyed Japan. So they knew that if atomic warfare comes, total collapse of telecommunication and disruption will be there. In those cases also, can I go through a private networks? Can I work through interconnected computers all over the world? That is how the internet came into existence. Okay, internet came into existence. So some kind of risk management. In case that happens, what do we do? Apocalypse. If the world is destroyed, if the world is totally nuclear waste, what do we do then? Is the question you might want to answer. Other matters as prescribed, like that, right? So, listed on other companies having paid up share capital of 25 crore or more, where the paid up share capital is 25 crore or more, they shall contain a statement indicating the manner in which the format of annual evaluation of the performance of the board. See, you as an employee, your performance will be evaluated. Similarly, the performance of the board also will be evaluated, where the paid up share capital is 25 crores or more. Okay. The board, its committees, and individual directors, their performance will be evaluated. Okay. This is also there. Evaluation of board performance. Good. See, some of these topics being purely theory, I will quickly go forward, skipping, so that you don't have to, waste your time. Where disclosures referred to in the subsection have been included in the financial statements, such disclosures shall be referred to instead of being repeated in the board's report. See, in some cases, there could be a disclosure in the financial statement also on the same matter. If so, you can say, refer to note number so and so. Okay. Normally, the auditor's report does not extend to the board of directors. But where something is included in the notes, then to that extent, certificate extends. Where the company's policy on directors' appointment and remuneration and CSR is available on the company's website, then it is enough if you give the salient features and give the link. Okay, that's fantastic. 7 August is the date when atomic bomb was dropped on Japan. Okay, since you're talking about it, Tiwariji, in April, I was in Japan and I visited the city of Hiroshima. Okay, I visited the city of Hiroshima, where there is a memorial for the atomic bomb. They still retain some of those destroyed buildings there. You can have a look at them. There's one destroyed tower, and also they replay that last 2 minutes of the atomic bomb, how it fell and how it destroyed them. Very, very sad. In fact, after I went there in the morning, we came out, my friends and I, we were feeling very depressed. And we were only praying that once again, this should not happen. That all the superpowers, so-called superpowers, the president has to go and visit this place and see it once. They will get convinced that it should not happen. Okay. But so 7th August. See, a foundation result bomb will be destroyed, will be burst. Then we will know what happens. I don't know. Chalo, good. Abridged board's report. The central government may prescribe an abridged board's report because it's too lengthy, only for one-person company or small company. In the case of OPC, the report of the board of directors to be attached to the financial statement shall mean a report containing explanations or comments by the board on every qualification. See, because this whole board's report is because there is a dichotomy, division between owner and manager. In OPC, hey, this guy is only the owner, Baba, and definitely he may be director also. You meant to say, as a director, he'll give report to himself. I told you about roles. Even then it sounds very schizophrenic, right? This guy is the director. As a director, is reporting to himself as the owner. I mean, in case there's a separate director there, even then, why should I keep reporting? Just in case there is any qualification by the auditor, you might have to respond to it. Now we come to director's responsibility statement. Board report is not issued with periodical financial statements. Quickly to answer your question, no. No boards report with, only boards report with the final financial statement, annual. No, nothing to do with the periodical financial statement. All these are found in the annual report of the company, agreed. B, still Mohammed is locked into his intermediate holding. Let us see, B holding C and A holding B. Both B and C in that case, can B do consolidation of financial statements of C? See, if B does not want to do it, can avoid ma. That's all. If B does not want to do it, can avoid ma. Provided A does consolidation of B and C. B can avoid consolidating C ma. Provided no shareholder objects, not a listed company, and A is consolidating anyway, then B can avoid ma. So which one is correct? Can B do consolidation of FS of C, or A do consolidation of both B and C? Both are correct. If both are necessary, if B wants, B can avoid, provided no member of B objects, and A is consolidating B and C. Okay? Because it's an intermediate holding company. The ultimate holding company is consolidating. Muhammad, if you still have doubt, God save you. Okay. Are you clear? That time you said you are clear. Now again you are raising a doubt. Earlier you asked and you said you are clear. Now again you are raising a doubt. Are you now clear? Hello, board report is common, Darshan. There's no such thing. Every director cannot release. Director's report will be in one format given here, ma. That will again be, just like they are authenticating the financial statement, that will be signed by 2 directors. Okay, it's a common report. The director's responsibility statement is very interesting, wherein they confirm, okay, they expressly state that the applicable accounting standards have been followed. The directors had selected accounting policies and applied them consistently and made judgments and estimates that are reasonable and prudent so as to give a true and fair view. So the directors cannot tomorrow get up and say, "We are not aware of all this, Your Honor. All this was done by auditor." No, it is your job to select the accounting policy. Use your judgment. Then I will audit and tell you whether you are right or not. That is my job. The directors have taken proper and sufficient care for the maintenance of adequate accounting records. And in accordance with the provisions of this act, for safeguarding the assets of the company and for preventing and detecting fraud. See, detection of fraud again is primarily responsibility of management. Directors cannot simply say auditing has happened, therefore, even if there's a fraud, I am not responsible. No, sir. On a day-to-day basis, you are running the company. If you cannot detect the fraud, how can an auditor who comes at the end of the year come and find out? Yes, we can. But if it's a well-laid fraud, given the nature of our audits, which is why internal audit is there. Internal audit can disclose fraud. That is why you should do. So it is up to the directors to put in place an internal control mechanism, an internal review mechanism that would ensure that there is no fraud. The directors had prepared the annual accounts on a going concern basis. You have to confirm it every year. See, everybody is telling guard it except Mohammed, who is raising this doubt again and again on intermediate subsidiary, intermediate holding company. The directors have prepared the annual accounts on a going concern basis. The directors in the case of a listed company had laid down internal financial controls to be followed by the company, and that such internal financial controls are adequate and were operating effectively. Boss, when I come for statutory audit, I will verify the internal control. I will. For example, on a periodic basis, I'll review IC. Internal control questionnaire will be given, and we'll see whether we'll put the template on you and see whether you are following. If there is any discrepancy, very serious discrepancy, then we will report it to you separately as an MR, briefly to the audit committee. But if it is not affecting my true and fair view materially, then as a statutory auditor, I have no problem there. But internal auditor, no, materiality won't work there. You'll have to inform. Potential fraud also you have to tell. Because of this internal control weakness, it is possible that somebody may do this. So we have to stop this now. Most of the time, frauds happen only when there are internal control weaknesses. When same man is doing both the jobs, there is no internal check. Okay, our system is so strong that system takes care of everything and one man controls it. There is no internal audit trail. or audit trail is capable of being deleted, passwords are being disclosed, shared, big problem. Then internal control, automatically there is a scope for fraud. The directors, thank you, Mr. Mohammed, for becoming clear. The directors have devised proper systems to ensure compliance with the provisions of, I have highlighted all applicable laws. So better get yourself a legal advisor. Have a legal firm, okay, a leading firm of lawyers who will advise you on all applicable laws. Okay. Yeah, I'm plugging for my son, who is an advocate. Okay, I'm trying to get business for my son because I'm a chartered accountant, he's an advocate. So CA cannot give you on all applicable laws. You need a chartered advocate. So hire a good advocate or firm who will do a complete legal study, and then they'll come out with what all laws applicable to you and what are the compliance levels and advise you, prepare a report and give it to you. So if you are the CFO, you have to recommend it to the board that you should get a review, because tomorrow you are signing, sir, all applicable laws. Do you want to take that risk? Immediately they will say, no risk. You hire whichever firm, leading firm in the city you hire, let them do it. So the board's report and any annexures thereto shall be signed by chairperson where authorized by the board, or two directors, out of which one shall be MD. So just like they sign the balance sheet, this also they will sign. In case there is any contravention, fine of 3 lakhs for company and officer 50,000. Members are entitled to copies of audited financial statement. Copies of audited financial statements, consolidated financial statement, audit report, other document, everything should be sent to every member, every trustee for debenture holders, other persons like bank, etc., to whom there is a contractual obligation. See, when the bank lends money to you, they will put a condition says every year audited financial statement should be sent to us. You have to give. And the circulation of the financial statement at not less than 21 days before general meeting. Later on, when we come to management and administration, we will see that notice of AGM should be given 21 clear days before the meeting. We will see that. What is clear days? I will explain when I come there. So the same way, along that 21 clear days before the meeting, you should give the financial statement also. You can't bring the financial statement at the meeting and say, see, these are the financial statements. Go. No, it should be sent to them 21 days before, giving them enough time to prepare, raise questions. They will come for the meeting with questions. Boss, if I don't know if any of you have attended listed company ka AGM, as the secretary of the Tamil Nadu Investor Association, I have attended. And as a shareholder, I have attended, but after some time you get bored or something. Sometimes I will go just for the fun of it. When I know it's going to be a troublesome meeting, I will go there. They will raise all sorts of hooligan shareholders will come. Hooligans, literal hooligans, ruffians. They will behave. This is the one opportunity for these fellows to stand up in front of everybody and address the great MD of that company. When this fellow in his life, he will never be able to stand before that gentleman and talk. Just because he's got 50 shares or 10 shares, fellow stands up and he'll ask, Mr. Chaudhary, how is it possible that you are going to Singapore every year? Hey, what is for development of business I'm going? That they will ask. Why there is huge foreign travel expenses? They'll ask. It's a shareholder, you have to answer him. You cannot avoid. If you say no, you don't talk, gone. So the auditor will be there, don't worry. For that 100%, they will ask me to come. Srikanth, you please come and stand. If they ask some question, I don't know what to say. Then your company secretary, sir, no, ask him to answer. The company secretary already pissing in the pants. So he says, sir, no, sir, you come. So we have to sit there, and when the fellow asks the question, we have to answer the question also. What to do? Because these fellows cannot answer it properly, we will answer. We'll give them a suitable reply so that he'll keep his mouth and shut and sit down. After that, he won't stand up. Okay. 50 shares the fellow is having, 10 shares. Or he may not even have shares. He may be, sometimes we have discovered that also. Whenever a man is raising too much questions, now I'll ask them to verify. Is he really a member? Does he have a valid proxy like that? Once or twice we have discovered that the fellow who's creating problem is not even a shareholder. He is not registered. In front of everybody, I'll ask him, sir, what right have you to enter this private meeting? You are not a member of this company. We have not invited press. If you have invited press, come as a press. That's different. We have not invited press for this meeting, so kindly leave. So, this is for information. Section 8 company, the financial statement shall be sent not less than 14 days before the date of AGM. Same way you will find AGM notice also can be given 14 days before. You remember when we studied incorporation, one of the exemptions available to Section 8 company was AGM notice can be sent 14 days, not 21 days. Same way financial statement also can be sent not less than 14 days before the date of AGM. Right? The financial statements are to be sent not less than 21 days before the date of meeting. If the copies of the documents are sent less than 21 days before the date, they shall, notwithstanding that fact, be deemed to have been duly sent if agreed to by the number of members as stated below. So in case you are sending it less than 21 days, then in the case of a company having share capital, a majority in number entitled to vote representing not less than 95% in value of the paid up capital. Friends, this particular thing is loaded with meaning. Majority in number entitled to vote representing not less than 95% in value of PUC. Remember, when you are having differential voting rate shares, that fellow may be having half a share, which means for every 2 shares, he'll have 1 vote. Half vote means every 2 shares, he'll have 1 vote. But here they are saying majority in number entitled to vote. Suppose the company is having 300 members, 100 full vote, 200 half vote. Still, I need to get 151. Majority in number entitled to vote. This fellow may be half vote. I cannot say proportionately 200 will be taken as 100. No. You get 151. Are you able to understand what I'm saying? 151 guys should agree, minimum. And they should represent not less than 95% in value of PUC, paid up capital, not total voting power. Are you able to understand this? I'm going slow so that you can understand the point. This particular point is loaded with meaning. See, one thing I'm going to request students, never suggest a break to me in the query pad. Please, let it be my discretion to have a break or not. If you want a break, please go ahead and take it. You are sitting in front of a computer. I won't even know whether you are going. Please, if you so badly need a break, take it. Don't worry, you will miss hardly 5 minutes, 10 minutes. Nothing will happen. Go get yourself a cup of tea. Okay, I will give a break, but kindly do not suggest a break because you are disturbing the flow of the class. Think about it. In a physical class, 200 students are sitting before me. I'm standing on the dais and taking a class. Can you stand up and say, sir, let's have a break? Will that not be very rude, Miss Kavita? Can you do it in physical meetings? Can you just stand up and say, sir, enough nonsense, sir. Let's have a break. Don't do that. Just because it's a query pad, just because it's an online meeting and you're using chat box, doesn't mean you can do this. You are disturbing the flow of the class. And that too, I'm teaching something very important. Please don't allow me to when to give the break, let me decide. I know, Kavita, you are a very brilliant student, you are intelligent. Yes, some small points of how to talk, how to behave also you have to learn. As you become a CFO, senior finance person, remember, just because you are a highly knowledgeable CA, doesn't mean you can behave any way you want. It's a type of behavior that you have to learn. Okay? Politeness. For example, yes, like that. You had a sir there when you're addressing a senior person, not you. That is Muhammad. Somewhere else you are just saying, okay, yes, like that. Be a little more polite. Nothing will happen. Okay? So kindly don't mistake. I will give a break. Just give me a break. Wait, listen. Suni. So this is very important. Majority number entitled to vote representing not less than 95% in value of the paid up capital. For company not having share capital, members having not less than 95% of total voting power. Here, members having not less than 95% of total voting power. Here they are talking about total voting power. Whereas here they are talking about paid up capital for company having share capital. So, see, that's what I'm saying. There are this is a numerical problem is there. You can try to answer it. And then once you finish it, before we go to the next topic, I will give a break. Okay. Got it? Navayuk Chemicals Limited, an unlisted public company, has 200 members. Its paid up share capital is rupees 50 lakh. consisting of 5 lakh shares of ₹10 each. The company is proposing to hold its AGM on 28/9/2021. There was a delay in submission of accounts for audit, and hence signed financial statements are ready only on 10/9/2021, which is too late, less than 21 days. The company has obtained the consent of 160 members who are holding 45 lakhs of PC. Can they proceed to circulate? Company has share capital. Okay, company having share capital. Majority in number entitled to vote representing 95% in value of paid up capital. Check out. Is it there? Can they proceed to circulate the financial statement less than 21 days before the meeting? Here I am giving. This is it, Bhumika ji and Sweetie ji. This is the example. This is the example. What is majority in number? Out of 200 members, 100. Out of 200 members, 100. Whereas they have got 160 members. Okay. Out of 50, how much? 95. Check out. Have they got 95? That is, what you need to do is 45 lakhs they've got divided by 50 into how much do you get? So minimum you need 101 majority in number, but those 101 fellows should hold 95% of paid up capital. So we have got the consent of 160 members. Good, more than 100. But these 160 fellows are holding 45 lakhs of PUC. Whereas how much they should hold? They should hold. They are holding 90 only. 90. They are not holding 95. No, Mr. Muhammad, you have exactly got it wrong. If the differential voting rate shares are there, they will be counted as one member and their shares will be taken as one share, paid up capital. So that should be 100 shareholder as differential voting rate of half per vote. No, it will be taken as 100 votes, not 100 votes. I think you're misunderstanding. That is your problem. There is no vote here. This is not a vote. This is not about poll. This is not about voting. If you want to circulate your financial statement less than 21 days, see how many members you have, whether they are holding differential voting rates or full share. No problem. If you are having 300 members, 100 normal full vote, 200 half vote, 300 members. Out of that, majority in number means how much? Out of 300, majority in number. Forget 50 vote and all. That's not half vote and all. You can't take 200 people as 100 people. 200 people will be taken as 200 people. 100 will be taken as 100. Total 300. Total number of members. Out of that, majority. Meaning 150 should be there. Out of that, these 100, whomever number of members more than 150 you are having, should hold 95% in value of paid up capital. So don't take it that 50% half vote and all, ignore it. Have you understood, Mr. Mohammed? So sir, Mr. Rajiv Mishra, now you are coming and saying Hindi. I have been teaching in English for so long. What were you doing all along? Sorry, I am not familiar with Hindi. Please. And very clearly my contract says I have to teach only in English. Please. I totally sympathize with you. Your inability to understand English. That's why I'm doing in very simple English, so that you can understand it. How, if I ask you to speak in Malayalam, can you do that, Mr. Rajiv Mishra? Same way, I cannot speak in Hindi. Okay, please understand my difficulty also. Shall I explain in Malayalam? I can do that, but I don't want to. I would prefer to use English. Okay, please understand, Rajiv. See, how long you can be without understanding English in your life? You decide. Rajiv Mishra, you decide. How long? English is the Rajya Bhasha, Hindi is the Rajya Bhasha. Everybody in the world should know Hindi and all. You can put rule. But how long this can go on? So you are going to become a member of my institute. Tomorrow we are going to meet each other, let us say in Kolkata in a national conference. How will you speak to me? Hindi? I cannot understand. You will be a member of my institute and you will speak in Hindi to me, another senior member. Maybe I'm addressing you. I'm coming down from the dais. If you come and talk to me in Hindi, what I'll say? Please, Angrezi mein boliye na. Please talk to me in English. You should be able to explain in English to me. Kindly, Rajiv, normally I will never make this language issue such a big thing. But this one word Hindi command and all, don't give to me, please. Okay? I have this, because after this, we are going to do management and administration. Everything I cannot explain in Hindi. If you want somebody to teach in Hindi, I'm sure there are people who can teach in Hindi. But this is a board of studies class. Please do not expect. Okay. So see, that's what I'm saying. Muhammad is saying, I'm relating to Malayalam. That is wrong. Even what Muhammad is doing is wrong. Vernacular also, don't get into it. Because you speak Malayalam, I speak Malayalam, somebody speaks Telugu, somebody speaks Tamil, somebody speaks Kannada, somebody speaks Punjabi. Hey, this country gone to the dogs because of that. Let us all speak in one language, which is English, which is comfortable. And for professionals, Hindi is the Rajya Bhasha, Hindi is the everything, Hindi is the world great language. I agree with you. But the common language is needed in a country like ours, especially when 6 states in the south do not speak that language. Okay, do not speak that language. I'm not saying Hindi is wrong. I'm saying don't expect the whole world to speak in Hindi for you. Today you can command Srikanth to do. You can throw the whip at me and say, you are taken money, give me in Hindi. And some fellow may be teaching to you in Hindi also. He is doing you a disadvantage. The person who's teaching in Hindi to you, helping you to understand the subject in Hindi, is putting you in a great disadvantage in your life. Because later when you go to a large corporate as an employee in a higher level position, see, clerical level, worker level, Hindi is enough. But once you reach, say, AGM, you will find that you will be meeting across the country people. Some of whom will be very fluent in English. They will be your competitor in that company. So when you have promotion for GM, suddenly you will find, hey, something is preventing me. What is that? My inability to understand and speak in English. So please don't allow that to be a negative for you. Sorry, Rajiv Mishra ji, for taking this up and making it an issue. I'm not making it an issue. And this is a very simple concept. What is majority? I don't know what is majority in Hindi, but you can understand what is majority now. If there are 100 people, 101 is majority. So if there are 200 members, majority is 201. I'm sorry, 101. Now there are 160 fellows. Those 160 guys or those people, more majority guys, should be holding 95%. Okay, you can understand 95% of paid up capital. What is the paid up capital for this company? 5 lakh. What is 95%? Somebody has rightly said 4,75,000. I'm sorry, what is that? 45 lakhs? 47 lakh 50,000. Right? So that is how it should be calculated. So this company has not obtained the requisite majority. If in the example only 50 members have agreed, they have 95%. It is still invalid because you have to satisfy both the conditions. That is why they say majority in number entitled to vote representing not less than 95% in value. Both the conditions are to be satisfied. Okay. See, normally I will never make this issue about Hindi. In fact, I am trying my best to learn little bit of Hindi to relate to those students who are from the northern part and western part of our country. I do appreciate your inability to speak English, your inability to understand English. But kindly understand that I am not fluent in that language. So if you still want my teaching, if you like my teaching, please try to pick it up in English. Please. Humble request to all of you. Okay. See, don't get angry with me for telling this, Mr. Mishra. But in future, do not expect Hindi from Board of Studies faculty. If any Board of Study faculty is teaching in Hindi, blessings to him. But this fool cannot teach because he does not know Hindi. Are you able to understand? He is ignorant fellow. He does not know Hindi. He only knows English. Okay. Please have pity on this fellow and try to understand in English. What do you say? This is better, na? Okay, now I think Kavita Lansal had a point. I think we need a break. Time now is exactly 7:40. I will give a break for 5 minutes. Upper limit 10. So by 7:50, we have to be back. 7:45, we have to be back. Maximum 7:50. Okay? Go for a break. Okay, welcome back from a well-deserved 5-minute break. Now, my good friend, Mr. Subham Kopade, he is asking a very, very interesting question, which is, if the company is actually in default due to sincere reasons. I don't know what he means by sincere reasons. Okay, this is Navyug is actually a sincere reason, but there was a delay in submission. That is your mistake, ma. But still, assuming that there is no otherwise bad intention, they are not able to get the majority. What to do? they can circulate now and postpone EGM till, yeah, what they need to do is, the AGM they have already called, na? That AGM needs to be postponed now. That's the only way. Because the gap between this should be more than 21 days. There's no other way. You have to postpone it. That's all. There's no other way. Because you have not got the members, right? So you have to postpone it. What this company should have done was, they should have anyway got a permission for postponing the AGM. Okay, they can do that. They can postpone the AGM. But if they want to do that, they should have gone to the registrar and they should have got the permission. There he will monitor very carefully and give reason, but they won't. That permission is not given casually, but sometimes they will give. So at least that application should have been made by them. Then, no problem. Then this delay. But this fellow has not done that. Instead, they are delaying the accounts. So in those cases, they have to postpone the AGM. That is the correct way. You are correct, Subhamji. They have to postpone the AGM until beyond 21 days from the date of dispatch now. That will again go through the process of giving notice and things like that. They should clearly mention that or what they can do is, they, instead of fresh notice, they can postpone the meeting. Later on, when you come to management and administration, we will talk about adjournment and postponement. What they can do is, they can postpone the meeting. The fixed date is 28/9. They can postpone it so as to give sufficient time before the meeting. They can do that. Yes, they can. Good question, Mr. Subham. See, in the case of a listed company, this circulation, etc. See, there are a huge number of members. I cannot print it and send it to them by post and all. So I will keep a copy of the physical documents for inspection at the registered office anytime. Also, a salient features of the documents will be sent, okay, to every member. And this statement is to be sent not less than 21 days before the meeting. If the shareholder want full, they have to give full financial statements. See, but today, SEBI has given a very clear instruction. If it is a listed company, shares are dematerialized, email address is there, then the entire financial statement can be sent by email to him. Or you can give him a link where he can go and get it downloaded. Okay, so no problem. But physically sending for listed company, no printing, nothing. They print maximum some sample copies, 100 or 200, but beyond that, everything is PDF, everything is online, downloadable. You can go and verify. Many companies, they will have. It is enough if you give them the AOC 3, okay, and by mail. And also tell them where they can come and see or how they can download them instead. Okay. Every member or trustee of the holder of debentures will have the right to inspect the financial statement, consolidated financial statement, audit report, etc. at the registered office. Okay. And if in case they ask for a copy, they should be given a copy along with the holding company for subsidiary also to any member of the company who asks for it. See, as I told you, normally the notice of annual general meeting and financial statement should be printed. Hard copy should be circulated normally. But as I already mentioned, all listed companies and public companies which have a net worth of more than 1 crore rupees, net worth of 1 crore, not very difficult. Many companies will have unlisted net worth of more than 1 crore. And it's not only paid up capital, net worth includes other things also, right? Your reserves, securities premium. When you add everything, easily it will go to 1 crore. And turnover of more than 10 crore. So either a listed company or public company having net worth of more than 1 crore and turnover of more than 10 crore. This is common. Then if the shares are held in dematerialized form, then you can send it by electronic mode.
If it is not held in dematerialized form, then you can get his consent in writing for electronic mode. You can say the shareholder agrees in writing to receive through electronic mode. In writing, he gives his consent. Then you can. If so, if not, then physical copies only. Which means all listed companies by electronic mode. Because 100% the shares will be held in dematerialized form. Unlisted companies, they will better get it dematerialized, then automatically electronic. If it's not dematerialized, then at least get a consent in writing. Otherwise, you have to send it by physical copies. Non-dematerialized shares, it has to be sent only in physical copy for all other companies. Other than these two categories, all other companies, physical form only you have to send it. Okay. In case there is any violation, as usual, company penalty 25,000, officer 5,000. Very, very important. 137. Default in 137 is a problem many places. Do you remember? Whenever you want to issue DVR, intercorporate law, everywhere, if you have not filed the financial statement and the annual return, it will become a problem. Annual return we will see in management and administration. The section will come earlier. Okay. So that you have to check. And here you have to file financial statement with registrar. If you don't do it for 3 years, you are defunct. Treated as defunct. Okay. So financial statement has to be filed with the registrar. So first of all, the basic question you have to ask, was the AGM held? Yes, it was held. Were the financial statements adopted by the members? You see, at the AGM, the members, you will present, you lay the financial statement before the members. Then there they have to pass an ordinary resolution. If such a resolution is passed, then adopted, then no problem. You file it with the registrar within 30 days of the date of AGM. 30 days of date of AGM. Please remember, financial statements to be filed within 30 days, right? Maybe you can, if you want, I will highlight it. 30 days, okay, of the AGM. It is not adopted. Rarest of rare cases. I am yet to hear of a AGM not adopting it. There will be a huge maybe it's a highly disputed company where the shareholders are not. Even then, you know, we can somehow get it adopted. Unadopted, first time I'm hearing this type of a thing. It can happen. Once in a while, it can happen. Unadopted in AGM or even an adjourned AGM. Okay. And see, in one case, I remember there was a company, listed company, where I was the auditor. It's a lousy company in those days, 1997, early stages of my career. I'll tell you that company was run by a useless fellow, but accounts were pakka, auditing was pakka, but that fellow was cheating the shareholders, but nothing on the record. In fact, as an auditor, I have nothing to fear because everything is above board, compliance with the law, but he swindled. Company was continuously making losses, every year posting losses. But this fellow was very, very rich and well off. How that happened, I cannot tell you now. Later on, you come to final exam level, I will tell you, not now. Okay, but on the face of it, in the annual report, nothing. In fact, in one meeting, he himself laughed at me and he said, Srikanth, if you can find out, you find out like that. Even if I find out, you know, I cannot qualify. That type of fraud that fellow has done. He has cheated the shareholders. So the shareholders are very angry. So they are coming for the meeting with anger. So I told this guy, hey, come on. These guys are all going to come with a lot of anger. Better you know, do it in the morning, 10 a.m. finish. No. We'll have it at 12:30. Hey, if you have it at 12:30 noon, fellows will come with the intention to have lunch. Because in the AGM season, they will go to various places for AGM. Yours is 12:30. So they will attend 10 o'clock, 11:30, then come to you for 12:30. So by the time they come, they will expect you to provide at least some packed lunch. No, Srikanth, don't tell me all these things. We'll give them coffee. He had it in a leading hotel in the middle of the city, heart of the city, good hotel. They came with expected lunch. No lunch. There was a big chaos in the meeting. I'm not joking. I was sitting on the dais, suit, tie and all.
MD, suit, tie, company secretary, suit, tie, all of us sitting there, meeting, big fun, all sorts of things. Tamasha was going on. They were shouting this side, that side. This fellow was proposing. The MD was proposing. Chairman as chairman, he was proposing. Somebody was seconding, but they were not allowing the vote to happen. Finally, the accounts are unadopted. So then he was asking me what to do. In the meantime, one of the angry shareholders, he came running to the dais and he climbed the dais and he pulled the tie of the MD. He pulled the tie. MD, then the MD sort of escaped. Then I was also on the dais. Now, immediately I removed my tie and put it in the pocket. And then myself and company secretary, we escaped through the service lift. I told the company secretary, hey, this is not our job, let's run. So we ran. Then I went home. My driver was luckily knew something is happening. So he kept the car ready. We both of us went and I, through the service lift, ran out, got into the car and ran away. And this MD, I was told later, there was a window there. The ground floor now, but it was a window through which he jumped and he escaped and ran away. Then matter got over. Now, later he calls me around 2:30. I go home and I have my lunch and then I'm relaxing a little. He calls me, Srikanji, what to do, what to do? I said, what to do, what to do? I told you to don't have it at this time, have it at 10 a.m., finish it and send. Then what to do, what to do? I said, you adjourn the meeting. Then we adjourned the meeting 30 days later. Okay. And at the adjourned meeting, nobody came. We had it in the middle of the day, working day in the factory. This is the registered office. We had it there and we completed the whole thing. We adopted the accounts at the adjourned meeting. So it's quite possible that at the adjourned meeting it will happen. Anyway, so in case it is not adopted either at the AGM or at the adjourned AGM, then you should file it within 30 days of the AGM, the original AGM. And the registrar takes them in as provisional. Suppose it is later adopted in the adjourned AGM, then you should file it within 30 days of the said meeting. So that's all. If it's adjourned meeting, you get it. Okay. So this way you can do it. So legally there is a provision for this. Not held, AGM not held. Then the prescribed documents plus statement of facts and reason for not holding AGM should be filed with the registrar within 30 days of the last date before which the AGM should have been held. The AGM should have been held. Okay. So you have to file the financial statements, right? Failure to file financial statement is a big issue. Later on, you'll be in trouble. Now, certain companies have to file their financial statements in a particular format. You see, when you're uploading it, you should file it in a particular format called Extensible Business Reporting Language Format, XBRL format. The idea of this Extensible Business Reporting Language is to ensure that, see, once you upload it now, from the position of the characters, the software will pick the data. So when they are trying to find out for, say, 15 companies, everything will be matched through XBRL, so that exactly they will know where to go and look for capital, where to look for debtors. So it will be coded in that way. That's called Extensible Business Reporting Language. So in that XBRL, you have to upload it. It's a little costly. It will be usually done by the company secretaries, for which they will charge you extra. Who has to do it? Companies listed with stock exchanges in India and their Indian subsidiaries. Companies having paid up capital of 5 crore rupees or more, turnover of 100 crore rupees or more. All companies which are required to file their financial statements in accordance with the Ind AS. If Ind AS is applicable to you, then if the convergence has happened and you have to comply with Ind AS, then you have to do it. So those companies for which Ind AS is applicable also have to file XBRL. So the companies which are filed their financial statements in XBRL shall continue to file it in XBRL, though they may not fall under this class in subsequent or succeeding years. So this is XBRL. The one-person company, the financial statement can be filed within 180 days from the closure of the financial year. Within 180 days from the closure of the financial year. Okay. 180 days, which is 6 months you have done for OPs. copy of financials. In the case of company having subsidiaries, if abroad, if unaudited in country of origin, see, you are having a subsidiary in a foreign country where it is not audited, then for that subsidiary, you have to file in India in a format similar to the format prescribed in Companies Act, Schedule 3 format. Okay, you have to file for that subsidiary in India because you are a holding company, you are having subsidiary in a foreign country where it is not audited in its country of origin, that subsidiary. Then you have to file in India in a format similar to the format prescribed in Companies Act. If the financial statement of that subsidiary is not in English, then you have to file along with the translated copy. Okay. This is for foreign subsidiaries of Indian companies, right? Correct. You are right. Maybe you are right. Once you have started filing returns, you have to keep on filing. That is how it is. Correct. Okay. In case you are not complying with section 137, okay, all these things, 137, penalty. For company, fine of 10,000 rupees, and for continuing failure, 100 rupees for each day, subject to a maximum of 2 lakhs. Officers, managing director, CFO, any other director, in case there is no MD or CFO, any other director who is charged with the responsibility of finance. If such a fellow is not there and all the directors of the company together, fine of 10,000 rupees, and for continuing offense, 100 rupees for each day, up to 50,000, right? Now we come to some very interesting sections. We are going to see some interesting sections. First of which is reopening of accounts on courts or tribunal orders. This was never there in the law earlier, newly introduced in the new law, means not recent amendment. In 2013, for the first time, we saw this reopening of accounts on courts or tribunal orders. Normally, the accounts of a company shall not be reopened, revised, or recast once it is laid at an AGM and approved by members. See, in case there is any error or any omission, you have to include it in the current year's accounts as prior period item. You know that. You have to include it as prior period item, clearly disclose it, tell why and all. But suppose there is a major mistake, major fraud like Satyam, where sales is completely wrong, purchase, employee cost completely wrong, fixed deposits completely wrong, profit completely wrong, everything is wrong, then you have to reopen. Okay, something like that. But reopening is possible only under the provisions of this section. Okay, and that too, it can be done only on direction by court or tribunal. Order for reopening shall not be made in respect of reopening of books of account relating to a period earlier than 8 financial years. Because if it is before 8 years, you would have destroyed the books and papers now. But where a direction has been issued by the CG, when there is an investigation, then they will say, keep it. So if once they say keep it, then no more 8 years. Till they say you have to keep it. In those cases, reopening is also possible. See, this happens. If you read this, you will see Satyam is there. For reopening of accounts, the application will be made by central government or income tax authorities, SEBI, any statutory regulatory body like TRAI or Banking Regulation Act, RBI and all, or any other person concerned, including even a member or investor association can do it. They will make an application to the court or tribunal. Then the court or tribunal passes an order. See, Satyam is the classic example where Satyam's accounts needed to be reopened. There was no provision in the Companies Act. Are you able to understand? For reopening, but it has to be done. Because any auditor, suppose Satyam scam got revealed. After that, you are the auditor signing the balance sheet. Can you sign with the opening balances, those opening balances, knowing that it is fraud? So you have to completely recast. I don't know how it was done, honestly. Maybe I'll need to find out from Padma Shri TNM and tell you. I'll definitely ask him what happened, how it got recast. Or maybe the amendment came at that time. Maybe this is when they amended it. For Satyam only they amended it and ensured that the accounts can be reopened. 2009, 2013. So reopen and recast and presented again. Okay. But it can be done only if the earlier accounts were prepared in fraudulent manner. Simply because there is an error and all, you cannot. If there is an error or omission, as usual, prior period item, you do it. But there is a fraud, then that entire accounts are rejectable. Only the correct accounts have to come. So then only you can, court or tribunal can pass an order. Or the court or tribunal will say that the affairs of the company were mismanaged, casting a doubt on reliability of accounts. See, maybe the MD was pocketing some of the money, taking some money home. So we have to do a re-audit. We have to find out how much was siphoned, make him liable, again put everything back. So in those cases also reopening possible. Notice is to be served to applicants and other persons concerned, and their representation will be taken into consideration. And finally, the tribunal will pass an order to revise and recast the accounts. If so, it will be done. Okay. This is recasting, revising, or reopening, and recasting. Recasting means totaling. Revising means changing. Revising and recast. Reopen, revise, recast. Okay. Obviously, it has to be audited again by a fresh auditor, hopefully, not the same auditor. Where the foreign accounts are audited in a foreign country, no need. If it is audited in a foreign country, no need. But if it is not in English, you have to provide a translated copy. Up to amount is given here just to ensure some limitation. Because if you keep on counting for it becomes, so they say up to 2 lakhs. That is my answer. If you still want to know why, you will have to go to the man who drafted this section and ask. But the idea is to limit the liability to some reasonable, not make it extraordinary. Why not? Auditors can jolly well be called. Hopefully as witness. Hopefully as witness. Most of the time, auditors will be called as witness. We will ask to give witness. But if the auditor has been part of the collusion in the fraud, then he is the accused. The name will change. He'll be no longer a witness giving evidence. He'll be an accused. In some cases, I have been summoned by a court for giving witness. That is, they'll ask me to swear and say, these are the accounts. Yes. Have you audited it? Yes. Are these people? Yes. They want to be sure that they might make me tell. Then they may ask me a couple of questions. I'll give an answer. And even in civil disputes, one party may call the auditor. Let the auditor come and tell whether this is correct or not. But in all these cases, we'll go only as witness. But if the auditor has been guilty of wrongfully certifying, collusively getting into a fraudulent activity with the promoters or directors, then he can be called as an accused. Later on, when you come to auditing, we'll talk about it. Any other person has to be the shareholder of the company or non-shareholder? No, non-shareholder can also make an obligation. For example, any other person could be at an investor association. But frivolously, you cannot. Just like that, you cannot, Baba. You should have a lot of evidence. See, what can happen is, there may be a lot of evidence. So, some people investigate reporting and all. Then based on that, an association of persons can do it. Okay. But if totally uninterested party is coming and doing it, the tribunal will want to know why. What is your interest in it? Why are you doing it? Is it to spoil the name of this company? Then the whole thing will turn. It will be treated as a frivolous or vexatious petition. And the company can then sue you for damages. So be careful before you go there. If you're doing it in public interest, good. Do it. But you have to have evidence. Without evidence, if you go there, you're out. Sir, you can't just like that make accusatory statements. You should have pakka proof. Believe me, even in forensic audit, when I have established fraud, my job is not over. Establishing fraud is the first step. I have to go for solemn sworn statement. I have to interview those guys. Some of them are criminals. They will sit in front of you. They will say nothing, everything is correct, everything. Then I have to put evidence in front of them and show, I have gone and done the investigation. I have asked so-and-so. So-and-so has told this one statement. He says that you gave him money for giving false bill. What do you have to say for that? Then also he will simply say, nothing. I'm not like that. It's not easy, sir. And you don't have the power of a police officer or a government officer in forensic audits. You have to quietly, you have to warn him. see, at this stage, I will stop. I will go away. Then we will report this matter to the police. Then the police will come for inquiry. You tell. Now, whether the police should come or you will give me the answer, then even then we will not come. But we will see to it that you are protected. Like that, all we have to tell to get his confession. Then finally, he will give confession. And that document should be there. Plus, videotapes and all I'll keep. Completely videotape the conversation. Tomorrow he'll come back and say, I never said that. Videotape the conversation. Take a sworn statement, sign from him. And any other evidence and witnesses against him, we will videotape. And we will keep it. Show him. See this, the guy who supported you in the fraud has now agreed that he is there. He is becoming an approver now. You tell me now what you're going to do. You have to collect so much evidence, sir. Only with evidence, I can go and even make one statement to the shareholders or to anybody. What will be the benefit to shareholders? This is not for benefit. Already fraud has happened. Accounts are wrong. So how do I conduct the current year's audit? I have to recast the old accounts. There is no provision in the act. They have made that provision. The idea is not to give any benefit to anybody. What benefit? Nothing. You should not have invested in such a company in the first place. Having invested, your money has gone. For that we saw, you can go for a class action and all. At that time, the fraud will be discovered now. Then the accounts are wrong, bhaiya. So that accounts has to be corrected. Otherwise, think about it. Opening balance will be wrong for the current year. Knowingly, you will take wrong opening balance and you will prepare financial statement. Can you do that? No. How to correct? That is why they are given this. So this is not benefit for shareholder. If you remember the two pillars, finally we said one more pillar is there. What is that? Public interest. This will come under that category. In public interest, we have to do, because these accounts are public accounts seen by all the investors, potential investors. So it cannot be wrong. It has to be reopened and recast and got it? Okay. Mohammed, as usual, asking questions like this. Chalo. Sometimes some students will come, they keep on asking questions like this. I'll be very happy to answer. Okay, now we come to another aspect, which is called voluntary revision of financial statements or boards. So it should appear to the directors that the financial statements or board's report does not comply with section 129 or section 134. It is non-compliant, maybe accounting standard, or not in accordance with, not giving true and fair, something gone wrong. The directors themselves are finding it. Okay, then the board may prepare revised financial statement or board report in respect of any of the three preceding financial years. Earlier, it was due to fraud, it is being done, application is being given by some third party. Here, directors voluntarily want to change. They have discovered some discrepancy. They want to correct it. It could be anything. See, in AS3, there may be one way of representing that is not done correctly. Possible, how it could happen. Some auditor did the audit, 2 years, 2 years. Then another firm, your firm is coming. You are great, man. You are highly intelligent. You go, this is wrong. As per schedule 3, this is what should be there. You are not done correctly. Immediately, what you'll say, sorry, what to do? Okay, we will revise the 3 years financial years. So for that, you have to make an application to the tribunal for prior approval. Then the tribunal will hear the case. And after passing the order, they will give notice to central government, IT authorities, in case there is any income effect. Okay. And they will also give their representations. Finally, the copy of the order of revised financial statement and board report to be filed. Okay. Sometimes capitalization issue could be there, in which case profit will go up. Or you might have capitalized something which should have been revenueized. You might want to push it into revenue, in which case income will come down. Nothing can be done unless if you can revise the return, you can't do it. Or you go to 119, that is also not possible. They will not give. But you are allowed to revise your accounts now. See, this is all meant for convenience only. It's not that every company will do it. Okay. Yeah, there is risk of life also. For what? For fraud. Yeah. In fact, risk of life is one thing, but they will create all sorts of problems. One forensic audit I did for an NGO, I reported fraud. Very elaborately I reported. Then that was a big example I had. Then that was in a place where, I conducted a class from that bungalow only once when I was in Sirumalai in Dindikal. Your class, I conducted it from that bungalow only. So I went, the NGO was in Dindikal, in a small town in Tamil Nadu. There I was doing this. And then the day I conducted this forensic and all, then my client had a bungalow on the mountains, Sirumalai, a small hillock, very nice place. So she said, you go and stay there, Srikanth, don't go to hotel and all here, it's not good. So I went, it's just a 1 hour drive up. I took my car, we went up, myself and my team, we went, just relaxed in the evening, had some food. By the time we went, it was 8:30. Then we just slept, morning we woke up, again came back, started our investigation, finished the investigation and drove back to Chennai. Then this guy is going and sending a letter to the NGO funder, he's saying, this auditor demanded bribe from me. He also wanted me to provide him with a hotel room in a star hotel and provide liquor. All that he said. He said, agreed. Let us say that he is telling the truth. Give me proof, Baba. He could not give proof. Then I told the NGO, friends, do you know where I stayed on that day? I didn't even stay in a hotel. I stayed with my client, for which I have photographic proof. Now, please see, on that time I was in the mountains. See the proof. I was not. If this fellow had provided on the day he says he provided, which hotel? Whereas actually I'm staying in that resort, in the bungalow. Here is the proof. I can even get an affidavit from my client that I stayed there. Huh? The NGO fell at my feet and said, we are sorry, Mr. Srikanth, that we should not have even have given credibility to that mail given by that fellow. We are taking criminal action against him. Then I told these guys, look here, this fellow has now made false accusation against me. Now I am going to take criminal action, civil action against him for damages. I sent a notice to him. My lawyer sent a notice. He said, look here, you have to pay me damages because my reputation you're spoiling. Then he sent a very, very abject apology. Literally, he fell at my feet and begged, sir, please let me go. I said, please go. Don't play this game again with a member of my institute. Don't think that we are fools. Because it's not just my reputation, sir. It's the reputation of our institute. And that is important. Every member is affected if one member is wrong. If one member is shown to be bad, every member is affected. This is what happened in Satyam. Because of the greed of one member, every member got stoned by the public. For no reason at all, we suffered. For no reason, we suffered. So every member, if you are not ethical, remember you are affecting me. Every member is bound to the other member, obliged to the other member to be ethical. You have an unwritten bond, unwritten oath you have signed. When you become a member of my institute, you are signing an oath that you will be honorable and honest. Because if you are not honest, everybody will become labeled as dishonest. That is why we have to be highly ethical as a profession. You should not, because if it's like Khandan, Khandan, where if your reputation is the family ka reputation, everybody will be affected by that. So you should not do it. Okay, there's only Hindi word I know. So Rajiv Mishra should not think that I can speak Hindi fluently. Okay. Chalo. So, revised financial statement can be done only for 3 financial years immediately preceding. And more than once in a financial year, you cannot revise. Once only you can do. The detailed reasons for the revision should be disclosed in the board's report in the relevant financial year in which the revision is being made. Okay. So you can recast and do it. Revision in this year you can. Where copies of the previous financial statement or report have been sent out to members, then the revisions must be confined to the correction in respect of which the previous financial statement or report do not comply, and consequential alteration. Right? The central government may make rules as to how to make this applicable and all that. I don't think they have made any rules, but they can. They have the power to make how it is to be done. Okay. There is something called the NFRA. I'll quickly run through this. See, the NFRA was very much there when Satyam scam happened, but not having the muscle that it has now. So once the Satyam scandal took place, the Standing Committee on Finance proposed the concept of NFRA. Okay. The Companies Act 2013 gave the regulatory framework, and the Union Cabinet approved the proposal in 1st March 2018. And the establishment of NFRA as an independent regulatory body
for the auditing profession will improve the transparency and reliability of financial statements. So this is not my own words. This is the view held by the Government of India as reported in Wikipedia. Okay. So NFRA would be a regulator for the auditing profession. You will ask me, then what is the Institute of Chartered Accountants of India? I don't know. So all along we were being regulated by our institute. Now they are saying NFRA will also monitor you. Okay. And they have a lot of roles. So they can make recommendations to the CG on accounting and auditing standards, monitor and enforce compliance with the standards, oversee the quality of service of the professions, and suggest measures required for improvement, perform such other functions relating. So basically, the NFRA will recommend the accounting and auditing standards. It will also monitor and enforce the compliance with the standards. Agreed. Right? See the height again, knee jerk from Satyam. Knee jerk. So now suddenly auditors are seen as some creature that has to be monitored. Earlier we were well controlled, well regulated by our own institute. We were very clear. We were doing things. Nothing was going wrong. But for that one Satyam, all this wouldn't have happened. Just like because of Enron in US, Sarbanes-Oxley came. Similarly, because of Satyam, see, after Enron, the then ministry, they came out with what is known as, I think, clause 56 of the listing agreement. Under that, we have to give a certificate for listed companies. The Kumaramangalam Birla Commission, they gave that recommendation. So, clause 49 of the listing agreement. Clause 49 of the listing agreement used to give a certificate. And so, what I'm trying to say, that was itself a kind of infringement where they were questioning, because thanks to Sarbanes-Oxley, independence of the board. Here they are trying to question the independence of the auditors. Are you truly independent? See, now the NFRA can have a chairperson and not more than 15 members. The chairperson shall be a person of eminence, having expertise in accounting, auditing, finance, or law. The chairperson to be appointed by the central government. The chairperson and members who are in full-time employment shall also not be associated with any audit firm. And during the course of their employment, 2 years after ceasing to hold. So suppose you are partner of a big multinational firm, for 2 years you cannot become chairman of or member of NFRA. Though it will be nice if you become, you cannot. Because there could be some, because mostly NFRA will be fighting horn to horn with the big firm, multinational firms. Because only they would be getting into that level of issues. Of course, even an ordinary smaller firm or a mid firm can also come. If you're auditing that type of a company, then you have to write. You're right. So notwithstanding anything contained in any other law, the NFRA shall have the power to investigate into the matters of professional or other misconduct committed by any member of a firm of chartered accountants. This is a clear usurpation of the powers of our institute. But we have to agree because of Satyam, what to do? See, this may be done either suo motu or on a reference made to it by the central government. Where the NFRA has initiated an investigation, no other institute or body shall initiate proceedings. Means we have to keep quiet and watch our member getting right royally screwed. What to do? So the NFRA is a quasi-judicial body, and when it's conducting an investigation, it has the same powers as the civil court under the Code of Civil Procedure. It can call for evidence, discovery and production of books of account, summoning and enforcing attendance of persons, enforcing inspection of any books. Whereas some person cannot come, then he can issue commissions for examination of witnesses or documents, all that. Okay. So where a professional or other misconduct is proved, then NFRA shall have the power to make order for imposing penalty. In case of individuals, 1 lakh to 5 times the fees received. In case of firms, 5 lakhs, 10 times the fees. For the member, that person can be debarred for being appointed as auditor or internal auditor or valuer for a minimum period of 6 months to a maximum period of 10 years. Debarred only for appointment as auditor, internal auditor. This does not talk about membership to the institute or COP. Obviously, that will follow suit. And NFRA is debarred, automatically institute will also take proceedings and debar that gentleman from the membership. Okay.
Obviously, this could be, sometimes the cases could be framed. There could be some malafide. So any person aggrieved by any order of the NFRA can refer to the National Company Law Appellate Tribunal. See, National Company Law Appellate Tribunal is above the NCLT. So NFRA and NCLT are same level. NFRA and NCLT are same level. So against the order of the NFRA, you can prefer an appeal to the NCLAT, NCLAT. Now, this is very interesting. Maybe if I have time, yes, I have 3 minutes, I can finish it. Okay, ICI is a partner in Nation Building, agreed. Suddenly you are telling this, thank you. Okay, now, very important, companies in respect of which NFRA may exercise its powers. So in case you are auditing these companies, then you will come under the NFRA net. Listed companies. Unlisted company having paid up capital greater than or equal to 500 crore. Turnover 1000 crore. 1000 crore is the magic number. Outstanding loans, debentures and deposits greater than or equal to 500 crore on 31st March in any previous financial year. Now, in that audit can be reviewed by NFRA. Insurance companies, banking companies, electricity companies, bodies corporate or companies referred by CG to NFRA in public interest. Even though they are not satisfying the above criteria, they are doing something bad, so they will be referred. Bodies corporate registered outside India, which are subsidiary or associate of the above A to D. So any of these fellows, if they have a foreign subsidiary or associate, there again, if you are auditing, NFRA may excise. So again, a company or body corporate referred to in A to D, provided it is registered in India. Okay. A body corporate registered outside India, if it is a subsidiary of a body corporate referred to in A to D, then it can come. We already saw that. Or where the income or net worth of such subsidiary or associate company exceeds 20% of the consolidated income or net worth of such company. So you have to satisfy two conditions. It should be a foreign subsidiary of any of these A to D, plus the total net worth or income should exceed 20% of the consolidated income or net worth. So you should take the total net worth and see whether this foreign subsidiary ka net worth will exceed 20% of the total net worth. Or take the income, whether the foreign subsidiary ka income will exceed 20% of the consolidated income. Okay, either this or that. Then only you can bring it into the subsidiary. A foreign subsidiary can brought in to the net only if they satisfy this condition. NFRA also will recommend accounting standards. We already saw that. If any company does not comply with the NFRA rules, they can be punished. Okay. And where 450 speaks about, they talk about section 450. 450 is a section, not in your syllabus, which prescribes penalty where no specific penalty has been provided, which is 10,000 rupees of fine. In the case of continuing, 1,000 rupees for every day. So NFRA will meet regularly and take up matters, and the head office of the NFRA shall be at New Delhi. And as you know, we remember IEPF, Investor Education and Protection Fund. Same way, NFRA will also maintain accounts as prescribed by CAG. The accounts of NFRA will be audited by C&AG, the Control Auditor General. And the audited accounts together with the report will be forwarded by the NFRA to the central government, right? Then the NFRA will also prepare an annual report. This will also be forwarded to central government. The audited accounts and the annual audit report will be placed by the central government before both the houses of parliament. You remember when we studied IEPF, I told you. Similarly, for NFRA also, there will be similar provisions. So we have come to a kind of a logical place where we can stop. Members of ICI will be included, definitely, because member qualification itself, you cannot let very few fellows can be government employees. Most of them have to be CAs only in some form or the other, because person of eminence and having expertise in accountancy, auditing, finance, or law, auditing was either he should be a government C&AG retired guy, Indian Accounting and Administrative Service, IAS, or he should be a member of, and mostly these IA and IAs also will be CA because they would have hired out of the institute only. So yeah, definitely members will be there. But remember, though he is a member of our institute, his role is NFRA chairperson or NFRA member. Okay. So there the role is different. There you cannot invoke his membership there. No. He is a member, true. But in addition to that, he's going to be there. Yeah, definitely we will be there. Without us, how it's possible. LLC is limited liability company. Limited liability company. In some countries like Dubai, they use the word LLC, limited liability company. I don't know where you saw this, but LLC, limited liability company. Okay, LLC. Same as limited liability company. You'll see that in Dubai companies. Dubai, some English companies will also, no, PLC they will have, public limited company. Yeah. It will be usually, especially Dubai, US based companies will have INC, like that. So French companies will have CIE, compagnie, CIE, short form of compagnie, CIE. COMPAGNIE, compagnie, that will be CIE. Depends. Dutch companies and German companies, GmbH. Depends. In all cases, they are indicating that these companies have limited, the members have limited liability. Fantastic. We will stop here. Thanks for the extreme cooperation. My apologies to Mr. Rajiv Mishra for not satisfying his request about Hindi, but I hope he will understand the reasoning I gave and ensure he attends regularly. And I will go slow and simple English. Let him learn and grow as a member of the Institute of Chartered Accountants. Wish you all the best. Have a great evening. Good night.